Welcome back to Cheddar. Today we continue our Idea of the Month partnership with Seeking Alpha. Joining us now is Seeking Alpha author Galileo Russell. Galileo, it's great to have you here.
Yeah, thanks for having me.
You cover one of the most fascinating companies on the planet right now, Tesla. This week, Elon Musk unveiled its plans, or his plans, for having self-driving trucks, this new truck that is just sleek and gorgeous. But there's also a lot of concern about just when the company would ever get to be profitable. Some reports saying that the company is burning through $500,000 a minute. So give us a sense of exactly where the future is for Tesla.
Yeah, they're growing really fast, and I think they're not trying to be profitable right now. I'd argue if they stopped expanding and didn't want to invest in Model 3 or the truck, then they could actually be profitable. But they're trying to grow. There's so much opportunity out there. And I think it's important to kind of think of them separate as the business and the stock and the financials, because from a business side, they're trying to generate hype and demand for this truck and the car. And they do a really effective job at that with these events. They got a ton of free press on the internet. They're generating a backlog. They get upfront cash, which helps them through these Model 3 production bottlenecks. So a ton of excitement.
And let me just correct myself. I said $500,000 a minute. It's $500,000 an hour is the report that's coming out.
Yeah, and see, I actually think that's intentional, and I'm a fan of Tesla burning capital because I think they do a really efficient job at spending it. And as an investor, I want them to grow as fast as possible and capture the opportunity out there. And so I'm actually a big fan of them losing money because I think that's what they need to do right now to invest and get the most market share long term.
You made two very interesting points there that I'd like to dig into a little bit more. One is that you think Tesla could be profitable on their core businesses if they weren't growing.
Definitely.
Why don't we start there? Do you have an analysis that supports that? I'd love to see an analysis that shows positive unit economics on the core business.
Totally. So Q3 2016, the company decided to stop investing in growth and produce positive cash flow, positive net income, positive operating earnings. And that was sort of just like a weird one-quarter showcase of, hey, we can do this. But the bottom line, like their cash burn, for instance, that you mentioned, the bulk of that is capital investments, or CapEx, that they're building out infrastructure to ramp production. They're going from production of 100,000 cars per year to 500,000. So I would argue if they weren't investing in that factory cost, they weren't hiring the personnel, the sales personnel to make those sales, then we'd actually see a really high margin kind of luxury car company with similar margins to Ferrari, especially with this new Roadster.
Sound like John Malone. We got the whole EBITDA trick all over again. But interesting, I understand the point in time in 2016, but their infrastructure costs and OpEx, in addition to CapEx, has grown significantly since then. If you took a point in time measure today and you eliminated not maintenance, CapEx, et cetera, but just pure investment spending, you think Tesla would be profitable?
They would not be profitable just based on their OpEx, but it's hard to just break it out like that because they're building out a store infrastructure to support hundreds of thousands of sales per year. So that's why I really am stoked when the Model 3 hits kind of a fully ramped phase, because they don't need to build more stores. They're just placing another car in the stores. So I think that's where you're going to start to see the leverage in the business model really turn. They're not built to be profitable with 500 stores selling only 100,000 cars. I would argue if they never wanted to put out the Model 3, just wanted to do S, X, and the new Roadster, they would only have like 100 stores. You'd see a much smaller footprint, more hype. They'd be smaller and profitable, but they're kind of going big. And so that's why you're seeing the economics look bad until they get the Model 3 in the store. And just another quick point, I think I look at Tesla as when they IPO'd, they had about 95 million shares outstanding. Today they have 175 million. So that's an increase of about 9% per year. In the same period, their revenue has grown from 117 million to this year about 11.5 billion, a 93% compounded annual growth rate. So their revenue per share has gone from $1.23 to 66 bucks in the past 7 years. So as a long-term investor, I'm saying, even though they're diluting, even though they're losing all this money, I'm getting a ton of value being generated per share still.
Is there any margin, whether it's gross margin, contribution margin, operating margin, that you would look at and apply the same analysis to see whether that's trickling down to some measure of profitability?
Totally. And so the gross margin, I think, is a great metric to look at to kind of see how profitable the kind of unit economics of the cars are. And last quarter, they did about 18 or 19%, but prior to that, they've been hovering in the mid 20% range, which is really good for a car company. And there's a couple discrepancies about whether they're doing the same type of accounting as other car companies. They do their accounting more like a tech company. So it's not quite an apples to other automakers.
Yeah. Well, you're a long-term investor, so you said that. Now, there are just so many aggressive timelines that Elon Musk puts out. Model 3, they had just hit about 260 production. They wanted to ramp up to 20,000. I mean, at what point is your patience going to be up?
I wouldn't say my patience is up, but I take every milestone that Tesla sets with a grain of salt. They're super aggressive. I think Elon Musk is less catering towards investors in Wall Street, more trying to motivate employees with these aggressive deadlines. And somehow it works, And even though they're missing the deadlines, the stock's trading at, 300 something, 60 billion market cap. They're raising billions of dollars, only diluting a tiny amount. So their investing strategy, I'm kind of a skeptic of it because they do miss these targets, but at the end of the day it works. At the end of the day they execute. We saw similar production ramp issues with Model S, with Model X. They figure those out. They become industry-leading vehicles, taking dominant market share. So I think we're just seeing that play out again with Model 3.
And what about Tesla's overall vision? Elon Musk wants to create an energy company. They dropped the word motors from its name back in February. They've got these other ambitions that are not really panning out on the top line, right? It's not contributing immediately right now to that top line, but how are you factoring that into the overall valuation of the company?
So I'm a huge fan of Tesla's vision, and that's why I'm an investor in the company, is I think the world needs to transition off of fossil fuels, and the opportunity to do that will create a massive business long term, not just cars, but in energy. So I think the acquisition of SolarCity expands the addressable market in a massive way. If everybody's driving electric cars, we're going to need a ton more energy production, so that's where the solar comes in. And I think beyond that, just the fact that you have a mission-driven company, you have a CEO who takes no salary, is only paid in stock, is at the factory coding robots till 2 a.m. in the morning. I just think there's a hustle that Tesla has that other automakers don't have, and I love that as an investor, and I think the reason they're hustling harder is because they have a much bigger vision.
How long have you owned the stock?
So I originally got acquainted with Tesla in about 2012. The position I have right now is I started in 2016. That was when I had enough money to actually put my own money into it.
Right.
So before that, it was other people's money. So.
What's the price target going into
usually goes the other way around.
Right?
You start with your own money and then you get other people's money.
Oh, well,
yeah.
I mean, hey, he could after this does well, if your investments are paying off. Stock price sliding to about $300 this year. What's the outlook for next year? What are the price targets?
I don't like to get into next year, this year price targets. I think the company's valued at $60 billion right now. The Model 3 could add $25 billion in incremental revenue. If they hit 25% gross profit margins on that, I think the operating margin of the whole company could even go positive. But they're going to keep investing. So, I kind of look at a company that's, $35, $40 billion run rate. If they get Model 3 to where they want, is that worth $60 billion? I think yes, because you get optionality with the Semi, then the energy business, then solar roofs. The Roadster is a super high margin product that I think is going to improve the whole profitability too. So I don't like to say it's undervalued now. I think it's a buy, but I think long term I believe in the company and think they're attacking an addressable market that could justify a lot of upside.
I think the biggest question here long term is going to be the gross margin, frankly, because at a 25% gross margin, there's not much wiggle room for how you get down to free cash flow, and eventually the free cash and the earnings are going to have to catch up with the hype. Company's trading on growth right now. Eventually, it'll trade on margin, and that'll be the question.
Yeah,
so we will see.
Great point. And one quick thing on it.
Yeah, real quick.
Elon Musk's 2012 in stock incentive package has a 30% gross margin target. I think that's what they're going to hit, and that's what the company's been targeting. So that's what I'm looking for.
Galileo Russell, author of
come
Seeking
back.
Alpha.
Yes.
Thank you for joining us.
Thank you for having me.